Welcome to the first ever episode of Coffee and Charts, where I'm going to be going over what the hell is going on in the cryptocurrency and Bitcoin markets as things stand today. In today's video, we're going to start with the price of Bitcoin as we are getting a rally. Now, is this a relief rally to then go back down, or is this the continuation to new all-time highs for Bitcoin? We're going to look under the hood as we need to look at the macro and the fundamentals and the technicals to paint a full picture of what's going on in the cryptocurrency market. So without further ado, let's jump in to the price of Bitcoin. Very simply, we are looking at the weekly chart here. I like to zoom out and then zoom in. So at the moment, what we're seeing is we had a green bullish candle close, not an engulfing, so not super strong, but what we are seeing here is the 100-week moving average that we have come down and tested not once, not twice, but 3 times here on the weekly. So this is a very key support that we are being supported by on the weekly price action. So this is very good. Another key thing to look at, which is something that I don't see anyone talking about online, is the cost basis for institutions. Institutions is what drives the market right now. Bitcoin is not for the retail, it's now for institutions. It's traditional finance. So we've got to go where smart money is and where the big boys are. The cost basis for institutions is, surprise, $84,000. And where did Bitcoin settle and is currently bouncing off of right now? $84,000. So this is a very key area that we want to keep an eye on as well. I've got 4 zones here. We've got our buy zone, which is the previous all-time high for Bitcoin at 70 to 74K. We have the fear and panic zone. So this is typically where Bitcoin goes into a kind of panic state, a capitulation state. That's why it's capitulated multiple times in this fear and panic zone. It's also where retail are panicking. A lot of the price action between $93,000 to $80,000 has been in that kind of panic zone. And that's where we're currently at. We have a third zone here, which is $94,000 to around $104,000. This is the de-risk zone. So this is a very important zone area where if we do end up going into further retracement into the buy zone, the de-risk zone is where you would want to reallocate your portfolio, maybe de-risk, maybe go more heavy on the Bitcoin instead of altcoins. This is the area where you can readjust the portfolio based on your risk tolerance, okay? Because the way that you win in this market is with proper risk management, and you need to know the areas where you could de-risk. A lot of the people that sold around $90,000 to $80,000, they are de-risking or panic selling at the wrong time. Okay, so this is the de-risk zone. This is where the 50-week EMA is. Usually and typically when we break this area, that is the area where it is a first signal of a potential bear market retracement. This is just one indicator. Don't use it as gospel. Don't just think, oh, we've broken the 50-week EMA. That's it. We're in a bear market. Doesn't quite work like that. We're in a completely different economical and macro environment. We're in a quantitative tightening environment, of which is now coming to an end. It stopped on the 1st of December. And this is super important. You need to understand the macro of this all, not just price action. Price action is good to understand, but we also need to have a look at the macro. So let's just take a look here. So we are moving up. We do have this downward trending line here that we're currently coming back up to test. So 95K is going to be a really key area for us to look at for a potential move back down if we want to retest the cost basis for institutions. So we want to look at that key area here. So we're probably going to get that big push up over the next few days, and then we're going to test this downward trending line. If we break that, then we're looking at 103K, which is where the 50-week EMA is. So that's what we're looking at on the technical side. Now, what is driving the price action? Because price action is driven by certain things. Number one, shorts are wrecked right now. Huge amounts, hundreds of millions of dollars worth of short liquidations is exactly what's caused this massive pop up right now. Couple of other things that we're starting to see is we are starting to see the narrative change around the macro environment in terms of Fed policies. So one of the big things is Trump is floating asset Kevin Hassett, which is going to be the new Fed chair. And they are basically signaling a pathway for easier macro conditions, and then that also signals a stronger risk asset bid. So people are pricing this in at the moment. Crypto is a leading signal for liquidity. When liquidity goes in the markets, that is where Bitcoin and crypto assets perform. One of the research reports that we did inside of Crush Circle, which is our educational platform where we cover macro fundamentals, TA, everything that you need to know to navigate this market. We've got 150 plus investors in there right now. One of the main reports that we've just done over the last couple of weeks to help people in our group navigate this market is we've done a massive report where over a 12-month window, Bitcoin is aligned directionally with liquidity 83% of the time. So when the money printer turns on, when more liquidity goes into the market, Bitcoin follows that. So now that we're getting the signal from Trump that liquidity is going to be, injected into the market in one form or another, that means good price action for Bitcoin. And then that also rotates into altcoin later on down the line. This is a full 18-page document. We're actually going to give this to you guys for free. So make sure you click the link in the description. You will get this 18-page report completely for free. It talks everything to do with liquidity, how the Federal Reserve assets, Treasury General Account, reverse repo facility are the three main things that are going to help increase liquidity in the markets. $95 billion worth of quantitative tightening that was being removed from the TGA is now pausing. So that's really good. So we're not taking liquidity out of the markets anymore. And we're slowly going to start putting liquidity back in. We had huge repo announcements where $13.5 billion have been added to the banks, added to the repo. That's more liquidity that's going to be injected in and also going to come into the markets over time. We've also had the Vanguard effect. So Vanguard owns $11 trillion worth of assets under management. Huge institution. They're now allowing a Bitcoin spot ETF. So one of the huge aspects of crypto moving is, again, institutional flows. When institutional investors are taking money out of the ETF, that is bad, prices go down. When they buy the ETF, that is good, prices go up. So where are we at with the Bitcoin ETF flow right now? Very simply, we have had 1, 2, 3, 4, 5 consecutive inflow days for the price of Bitcoin right now. This is really, really good. And this is exactly what we want to see. We do want to take note here that BlackRock has been the main culprit of taking and outflowing Bitcoin out of the markets. But we're starting to see for the first time that BlackRock has had a big inflow day, 120 in there, which is really good to see. And also the sell-offs are becoming less and less and less day by day. So you can see we started off 14th of November at 463 million. We're now down to 65 million, and now we've gone into the positive. So we're starting to see the tides change. This is positive. Now, one thing that we do need to know is we are going through a liquidity crunch. Everything's driven by liquidity. Not everything's going to happen straight away. This is kind of 2 to 3 month timeline where we're kind of going to figure out everything that's going to be transitioned in terms of the new Fed chair. If we start QE, when's that going to signal? Because there is an elephant in the room, which is the Japan yields right now. So the Japan carry trade is one of the biggest things that we've been looking at in the group for quite some time. We did our first kind of indication of the yen carry trade back in August of 2024. So this is a long time ago. Now, one of the things that's happening here is the yields are going up. This is not good. When it hits 4%, the math doesn't really make sense. Now, what this means is a lot of people are using the yen, borrowing with the yen super, super cheaply, and they were expecting rates to just continue to be near zero. Now, Japan announced 2 days ago that they're actually going to hike the interest rates for the first time in a while. So that means that this yen carry trade is starting to unwind. Okay, so this can cause a liquidity crisis. So we need to keep that in mind. We need to make sure that we're looking at this. Now, what will end up happening here is if the yen's not cheap to borrow against, we need another currency that's going to be cheap to borrow against. It's going to have to be the dollar. The dollar is the world reserve currency, and that's also why Trump really wants a weak dollar. So also he can refinance a lot of the C19 debt that we had in 2020 and 2021. So a lot of that is going to be refinanced over the next few years. And if we don't find a cheap solution to refinance debt, then that's going to cause a liquidity crisis. So one of the main things that we're going to be looking at here is we need to look at the dollar. We need to look at the DXY. This is, going to be the main indicator for us. And we need to see this start to topple over and start to come down here. So you can see in the last cycle, when the dollar toppled over and moved down, that was the bull market of 2020 and 2021. Okay, so recently we've actually had, since September, the dollar strengthening. That's not good. We don't want that. We want a weak dollar for assets. In terms of American purchasing power, that's another story. But we need to see this topple over. We need to start to see this come down. We need to see the dollar start to weaken. That means borrowing becomes cheaper. If interest rates come down, more cheaper borrowing, and then that means it's going to give us more of a risk on environment. Okay, so this is what we're looking at. This is why Bitcoin has struggled over the last few weeks, mainly due to a lot of different things. One of the main things being that we had the liquidity crisis on the 10th of October. That, caused cascading liquidations, deleveraging, unwinding, institutions selling off. Now that that is kind of stopped and has come to an end, now it's up to institutions to start buying back in. If we see that volume, if we see the liquidity, if we see more money coming into the repo, into the Treasury General account, if quantitative easing starts, then that's going to be really good and actually quite bullish for the market. So we really need to see here on whether this is a relief rally, or if there's enough liquidity that comes into the market in the next few weeks, then I'd be pretty bullish in saying that the bull structure change zone may be switched on, and then we can go into new highs. But that's kind of the stuff that we're looking at. So that's just a quick update for today. Hopefully you guys enjoyed. If you want to get access to the free report, make sure you go to the link in the description down below. You'll get that completely for free. And for people that are looking for, something a little bit more higher tier, we actually do have our platform, our educational platform. Think of this kind of like institutional grade research and crypto insights available for retail investors. So we have over 150 people in here that are taking advantage of some of the best education from the best experts in the space right now. So if you guys are interested, there is a link in the description down below where you can book a call with my team, and you can see if this is the right fit for you. This is for people that are really serious about crypto, serious about Bitcoin, serious about a long-term perspective on cryptocurrency, and to have a percentage of that in their portfolio and know how to do it properly, because a lot of people are online and influencers, they're talking about a lot of indicators and a lot of things that are relevant to previous cycles, but this cycle is not the same. It is just completely different. We can see that on the year right now of where Bitcoin sits and where it should have sat on a typical 4-year cycle. The institutions are in charge here. Traditional finance are in charge. So you need to understand how traditional finance works. And a lot of that is to do with liquidity. A lot of that is to do with macro. And none of these cryptocurrency influencers are talking about macro right now. And this is one of the majority of the things that we talk about inside this group, as well as a lot of things. We've got hundreds of hours worth of education on here. So if you guys are interested, click the link in the description, book a call with my team. But without further ado, this is the first episode of Coffee and Charts. Hopefully you guys enjoyed, and I'll catch you guys in the next one.